Hello, and welcome to Boni's Life, the channel where we dive deep into the world of finance, technology, and everything in between. I'm your host, Boni, and today we're tackling a topic that's not just on the horizon, but is already reshaping our digital world as we speak: the convergence of artificial intelligence and cryptocurrency. Now, I know what some of you might be thinking. Boni, AI, and crypto? That sounds like a tech bro word salad cooked up in a Silicon Valley garage. And you're not entirely wrong. The hype around these two fields can be absolutely deafening. But beneath the buzzwords and the sensational headlines, a powerful and transformative synergy is emerging. This isn't just about robots trading Bitcoin while you sleep. This is about a fundamental shift in how we build our digital infrastructure, how we create and exchange value, and even how we define intelligence itself. In this episode, we're going to cut through the noise like a hot knife through butter. We'll explore what this convergence really means, why it matters to both beginners and seasoned traders, and what the future might hold for all of us. We'll hear from some of the brightest minds in the industry, the traders who are navigating these new markets, the developers who are building this future brick by digital brick, the regulators who are trying to keep up with the pace of innovation, and the economists who are trying to make sense of it all. So, grab your coffee, get comfortable, and let's dive into the converging future of AI and crypto. Before we get into the nitty-gritty of their convergence, let's do a quick refresher on our two main characters, AI and crypto. I promise to keep this part painless. Artificial intelligence, or AI, is the simulation of human intelligence in machines. It's about creating systems that can learn, reason, and adapt without being explicitly programmed for every single task. We're already seeing AI in our daily lives, from the recommendation algorithms on Netflix that somehow know you better than your own family, to the voice assistants in our phones that occasionally understand what we're saying. But the real game changer is the rise of advanced AI, particularly generative AI models like ChatGPT, which can create new content, whether that's text, images, music, or even code. Then we have cryptocurrency, which is a digital or virtual currency that uses cryptography for security. The underlying technology, blockchain, is a decentralized distributed ledger that is immutable and transparent. Think of it as a shared unchangeable record book that everyone can see but no one can tamper with. Bitcoin and Ethereum are the most well-known cryptocurrencies, but there are thousands of others, each with its own unique features and use cases. Some are designed for payments, others for smart contracts, and still others for entirely new applications we're only beginning to imagine. For a long time, these two worlds developed in parallel universes. AI was the domain of tech giants and research labs with massive computing budgets, while crypto was the playground of cypherpunks, libertarians, and early adopters who believed in the power of decentralization. But now these two paths are starting to intersect, and the results are absolutely fascinating. So, where exactly are AI and crypto converging? The answer is in a lot of exciting and sometimes unexpected ways. Let's break down some of the key areas where this technological marriage is taking place. One of the biggest concerns with AI today is its centralization. A handful of tech giants like Google, Microsoft, and OpenAI control the vast majority of AI development and infrastructure. According to recent data, OpenAI and Anthropic alone control a staggering 88% of AI native company revenue. Meanwhile, Amazon, Microsoft, and Google control 63% of the cloud infrastructure market, and Nvidia holds 94% of the data center GPU market. This creates a massive power imbalance, raises serious concerns about censorship and bias, and limits access to this transformative technology. This is where crypto comes in like a knight in shining armor. Blockchain technology offers a way to create decentralized AI networks. Instead of relying on a single company's servers in some massive data center, these networks can be run by a distributed community of users around the world. This has several major advantages that we need to pay attention to. First, there's censorship resistance. A decentralized network is much harder to censor or shut down. No single government or corporation can pull the plug. Second, we get democratized access. Anyone can participate in a decentralized AI network, either by contributing computing power or by using the AI models. This levels the playing field in a way we've never seen before. Third, and perhaps most importantly, we unlock innovation. By opening up access to AI, we can foster a more diverse and innovative ecosystem where the best ideas can come from anywhere, not just from the labs of a few tech giants. We're already seeing this in action with projects like Bitenza, which is creating a decentralized marketplace for machine learning models. Think of it as a peer-to-peer network for intelligence, where AI models can collaborate and learn from each other. As the Bitenza team puts it, they are creating an internet-scale machine learning system. It's a bold vision, and one that could fundamentally change the AI landscape. Their token, TAO, runs on a 24/7 decentralized blockchain substrate that is auditable and transparent. It's like Bitcoin, but for AI. Another major player in this space is the Artificial Superintelligence Alliance, or ASI. This is a merger that was finalized in June 2024 of three leading decentralized AI projects: Fetch.ai, SingularityNET, and Ocean Protocol. Their goal is nothing less than to create a decentralized alternative to the AI projects being developed by big tech. By combining their expertise and resources, they aim to build a powerful, open, and decentralized AI ecosystem that can compete with the centralized giants. This is an area where the convergence of AI and crypto is already having a major impact, and it's something that traders need to understand deeply. The crypto markets are notoriously volatile and complex. They operate 24/7, 365 days a year, with no closing bell. There's a constant fire hose of information to process, from market data and social media sentiment to news, developer activity, and on-chain metrics. This is a perfect job for AI. AI-powered trading bots can analyze vast amounts of data in real time, identify patterns that humans would miss, and execute trades much faster than any human ever could. They can also help to manage risk by automatically adjusting positions based on market conditions. We're talking about systems that can process millions of data points per second and make split-second decisions. But it's not just about automated trading. AI is also being used to create sophisticated analytics tools that can help traders and investors make more informed decisions. These tools can provide insights into market trends, identify potential investment opportunities, and even assess the risk of different crypto projects. Some platforms are using AI to detect fraud patterns, while blockchain records that data, increasing trust in the entire system. Of course, with great power comes great responsibility. As Uncle Ben wisely told Spider-Man, the use of AI in trading also raises new challenges, such as the risk of algorithmic bias and the potential for flash crashes. We'll touch on these challenges in more detail later in the episode. Smart contracts are self-executing contracts with the terms of the agreement directly written into code. They are a key component of many crypto applications, from decentralized finance, or DEFI, to non-fungible tokens, or NFTs. When certain conditions are met, the contract automatically executes. No lawyers, no middlemen, no delays. AI can make smart contracts even smarter, and I mean that literally. By integrating AI into smart contracts, we can create agreements that are more dynamic, adaptable, and intelligent. For example, an AI-powered smart contract could automatically adjust the terms of a loan based on a borrower's credit score, or it could be used to create a decentralized insurance policy that automatically pays out claims based on real-world data. This brings us to another important concept: oracles. Oracles are services that provide external data to smart contracts. For example, a smart contract might need to know the current price of a stock, the weather in a particular city, or the outcome of a sports game. AI can be used to create more sophisticated and reliable oracles that can provide a wider range of data to smart contracts with greater accuracy and speed. Here's where things get really interesting. We're on the cusp of an economy of autonomous AI agents. These are AI systems that can act independently, make decisions, and transact with each other and with the real world. Protocol standards such as X402 are emerging as a potential financial backbone for these autonomous AI agents, helping them make microtransactions, access APIs, and settle payments without intermediaries. Gartner estimates that this AI agent economy could reach a staggering $30 trillion by 2030. Let that sink in for a moment. $30 trillion. That's larger than the entire GDP of the United States. And crypto is positioned to be the payment rails that make this economy possible. Why? Because crypto enables instant, low-cost, programmable payments that can be executed automatically by AI agents without human intervention. As AI becomes more sophisticated, we face a growing problem. How do we tell the difference between humans and bots online? This is where decentralized identity systems come in. World, a decentralized identity protocol, has already verified more than 17 million people. These systems can provide proof of human and help differentiate people from bots, which is becoming increasingly important in a world where AI can generate realistic text, images, and even videos. Blockchain-based identity systems offer several advantages over traditional centralized systems. They give users more control over their own data, they're more resistant to hacks and data breaches, and they can be used across multiple platforms and applications. As a 16Z crypto notes in the State of Crypto 2025 report, crypto may be the solution for some of AI's most pressing challenges, and identity verification is certainly one of them. So, that's a quick overview of some of the key areas where AI and crypto are converging. But don't just take my word for it. Let's hear from some of the experts who are at the forefront of this technological revolution. First, let's turn to the world of institutional finance. The big players on Wall Street are starting to take serious notice of the potential of AI and crypto. A recent report from a 16Z Crypto, the crypto-focused venture capital firm founded by Mark Andreessen and Ben Horowitz, highlights the growing institutional adoption of crypto. Major firms like Citigroup, Fidelity, JP Morgan, MasterCard, Morgan Stanley, and Visa are now offering or planning to offer crypto products to their clients. This is a massive shift from just a few years ago when these same institutions were dismissing crypto as a fad. The A16Z report also notes the explosive growth of stablecoins, which are cryptocurrencies pegged to a stable asset like the US dollar. According to the report, stablecoins have done over $46 trillion in transaction volume in the last year alone, up 106% year over year. That's a staggering number, and it's a clear sign that crypto is becoming a mainstream financial technology. On an adjusted basis, which filters out bots and artificially inflated activity, stablecoins have done $9 trillion in the last 12 months, which is more than 5 times PayPal's throughput and more than half of Visa's. More than 1% of all US dollars now exist as tokenized stablecoins on public blockchains, and stablecoins are now the 17th holder of US treasuries, holding over $150 billion. That's more than many sovereign nations. The report also points out that stablecoins are projected to grow 10 times to more than $3 trillion by 2030. Presenting a potentially strong and sustainable source of demand for US debt in the years ahead. The A16Z report also touches directly on the convergence of AI and crypto, stating that crypto may be the solution for some of AI's most pressing challenges. They point to the potential of decentralized identity systems to combat AI-powered bots and the use of crypto to create a financial backbone for an economy of autonomous AI agents. This is a powerful endorsement from one of the leading voices in the crypto space. But it's not just the crypto-native firms that are bullish on this convergence. Bernard Ma, a renowned futurist, technology advisor, and contributor to Forbes, argues that AI cryptocurrencies could revolutionize how enterprises build and scale their AI infrastructure. He points to the potential for decentralized AI networks to reduce the cost of computing power and to provide more robust solutions for data governance and compliance. As Ma puts it, every AI operation can be tracked immutably, creating transparent audit trails and automated enforcement of data protection requirements across different jurisdictions. This is a huge deal for businesses, especially those in highly regulated industries like finance and healthcare. The blockchain foundation of these systems offers robust solutions for data governance and compliance, which are critical concerns for regulated industries. Andres Zunino, co-founder of ZiconTech, an AWS partner delivering blockchain solutions, provides another expert perspective. According to Zunino, The tokenization market is projected to grow from $4.13 billion in 2025 to $10.65 billion by 2029, reflecting a compound annual growth rate of 26.8%. He notes that EY reports intelligent automation can reduce operational costs by up to 40% and speed up service delivery by a factor of 5. Zunino explains that AI-driven analytics have transformed asset valuation, due diligence, and risk assessments within the tokenization process. AI systems can synthesize vast data sets, enabling more precise valuations and streamlining due diligence. These advancements facilitate more accurate and objective asset pricing, providing a robust foundation for investor trust and efficient market operation. And that brings us to one of the biggest challenges facing the AI and crypto industries: regulation. The legal and regulatory landscape for these technologies is still very much a work in progress. Governments around the world are scrambling to keep up with the pace of innovation, and there's a lot of uncertainty about how these technologies will be regulated in the future. In the United States, we're seeing a major shift in the regulatory approach to crypto. The current administration has taken a more welcoming stance towards the industry, with President Trump vowing to make the United States the crypto capital of the planet. An executive order signed in January 2025 established a presidential working group on digital asset markets, tasked with developing a federal regulatory framework for digital assets, including stablecoins, and evaluating the creation of a strategic national digital assets stockpile. The working group is chaired by the White House AI and Crypto Czar, and includes the Secretary of the Treasury, the Chairman of the Securities and Exchange Commission, and the heads of other relevant departments and agencies. The White House AI and Crypto Czar will engage leading experts in digital assets and digital markets to ensure that the actions of the working group are informed by expertise beyond the federal government. The executive order also prohibits agencies from undertaking any action to establish, issue, or promote central bank digital currencies, or CBDCs. This is a significant policy position that reflects concerns about government surveillance and control over money. The goal, as stated in the executive order, is to establish regulatory clarity for digital financial technology and secure America's position as the world leader in the digital asset economy, driving innovation and economic opportunity for all Americans. The growth of digital financial technology in America, the order states, must remain unhindered by restrictive regulations or unnecessary government interference. This represents a major shift from the previous administration's approach, which many in the industry felt was hostile to crypto innovation. However, there are still many unanswered questions. How will regulators deal with the challenges of decentralized AI? How will they ensure that AI-powered trading systems are fair and transparent? And how will they protect consumers and investors in this rapidly evolving market? These are not easy questions, and there are no simple answers. It's going to take a collaborative effort between the industry, regulators, and the public to develop a regulatory framework that fosters innovation while also protecting against the risks. Now, I wouldn't be doing my job if I didn't talk about the challenges and risks associated with this convergence. As exciting as this technology is, it's not without its potential pitfalls. Despite the promise of decentralized AI, the reality is that AI development is still highly centralized. As I mentioned earlier, just two companies, OpenAI and Anthropic, control 88% of AI native company revenue. This concentration of power raises concerns about bias, censorship, and the potential for these companies to wield enormous influence over society. Blockchains offer a counterbalance to the apparent centralizing forces of AI systems, but it's going to take time and effort to build truly decentralized AI networks that can compete with the centralized giants. While the regulatory landscape is improving in some jurisdictions, it's still very uncertain in many others. According to PwC's 6th Annual Global Crypto Hedge Fund report, regulatory challenges remain the biggest hurdle to wider adoption of tokenized assets among digital asset-focused hedge funds. This uncertainty makes it difficult for businesses to plan and invest in this space. We need clear, consistent, and sensible regulations that protect consumers and investors without stifling innovation. Integrating advanced technologies into financial services introduces new risks, including algorithmic bias and cybersecurity vulnerabilities. AI systems can perpetuate and even amplify existing biases in the data they are trained on. This is a serious concern, especially in areas like lending and insurance. Cybersecurity is another major challenge. As these systems become more complex and interconnected, they also become more vulnerable to hacks and attacks. We need rigorous oversight and transparent governance to ensure that these systems are safe and secure. The concept of explainable AI or XAI has gained prominence due to the need for transparency and accountability in automated decision-making, particularly within highly regulated financial markets. XAI enables institutions to understand and interpret the outputs of complex models, ensuring that decisions align with legal standards and ethical expectations. This transparency is crucial for maintaining customer trust and meeting regulatory requirements. The use of AI in trading can also contribute to market volatility and flash crashes. When multiple AI systems are all making decisions based on the same data, they can create feedback loops that amplify market movements. We've seen this happen in traditional financial markets, and it could be even more pronounced in the 24/7 crypto markets. So, what does the future hold for AI and crypto? If there's one thing that's crystal clear, it's that this convergence is only going to accelerate. We're still in the early days of this technological revolution, and there's a huge amount of innovation yet to come. We can expect to see the development of more sophisticated and powerful decentralized AI networks. These networks will be able to perform a wide range of tasks, from scientific research to creative content generation. We'll also see the rise of an economy of autonomous AI agents, which will use crypto to transact with each other and with the real world. As Gartner predicts, this could be a $30 trillion economy by 2030. In the financial markets, AI will become an indispensable tool for traders and investors. We'll see the development of more advanced AI-powered trading systems and analytics tools. We'll also see the tokenization of a wide range of assets, from stocks and bonds to real estate and art. This will create a more open, efficient, and accessible financial system. The total crypto market cap has already crossed the $4 trillion threshold for the first time in 2025, marking the industry's broad progress. The number of crypto mobile wallet users has also reached all-time highs, up 20% from last year. We estimate that there are roughly 40 to 70 million active crypto users, an increase of about 10 million over the last year. Exchange-traded products are another key driver of institutional investment, with over $175 billion in on-chain crypto holdings today, up 169% from $65 billion a year ago. BlackRock's iShares Bitcoin Trust has been cited as the most traded Bitcoin exchange-traded product launch of all time. Between 2024 and 2025, the integration of automation and blockchain has reshaped how assets are represented, managed, and traded. Despite ongoing challenges, the shift toward tokenized markets is accelerating, driven by capital, technology, and the need for more efficient financial infrastructure. The integration of advanced technologies into asset tokenization is expected to deepen, leading to more dynamic asset management and clearer regulatory frameworks. Industry leaders predict the continued maturation of automation tools, further streamlining complex financial workflows, and enhanced interoperability between blockchain platforms. Of course, there will be challenges along the way. We'll need to address the risks of algorithmic bias, the potential for job displacement, and the need for robust regulatory frameworks. But if we can navigate these challenges successfully, the convergence of AI and crypto has the potential to unlock a new era of innovation, opportunity, and prosperity. This is a future that is not just being built by the big tech companies or the Wall Street banks. It's being built by a global community of developers, entrepreneurs, and visionaries who are passionate about the power of decentralization and the potential of AI. It's a future that is open, permissionless, and accessible to everyone. And that's what makes this such an exciting time to be alive. We are at the very beginning of a new technological paradigm, and we all have a role to play in shaping its future. Whether you're a trader looking for new opportunities, a developer building the next generation of applications, or just someone who's curious about where technology is taking us, this convergence of AI and crypto is something you need to understand. The convergence of AI and crypto is not just a technological trend, it's a fundamental shift in how we organize our digital lives, how we create and exchange value, and how we build the future. It's a shift from centralized control to decentralized empowerment, from opaque systems to transparent ones, from gatekeepers to open access. As we've explored in this episode, the convergence is happening across multiple fronts: decentralized AI networks that challenge the dominance of tech giants, AI-powered trading systems that are transforming financial markets, smart contracts that are becoming more intelligent and adaptable, an emerging economy of autonomous AI agents, and decentralized identity systems that help us navigate an increasingly digital world. The experts are paying attention. Institutional investors are pouring billions into this space. Regulators are working to create frameworks that foster innovation while protecting consumers. And developers around the world are building the infrastructure for this converging future. But this is not a spectator sport. The future is not something that happens to us. It's something that we create together. So stay curious, stay informed, and stay engaged. Do your own research, think critically, and form your own opinions. And most importantly, don't be afraid to participate in this technological revolution. That's all the time we have for today on Boni's Life. I hope you found this exploration of AI and crypto to be as fascinating as I did. If you enjoyed this episode, please give it a thumbs up, subscribe to the channel, and hit that notification bell so you don't miss our next deep dive into the world of finance and technology. Join me next time as we continue to explore the frontiers of finance and technology. Until then, stay curious, stay informed, and stay ahead of the curve. This is Boni, signing off.